Welcome back once again to the mathcenter.com, boys and girls. This is a series of short videos I made where I talk about certain questions in the recent November accounting paper, code 045212. I selected some of the questions which I thought needs a little bit more of thinking and a little bit more technical. I hope these videos help you. If you want to look at the earlier videos I've done on this paper, then you have to scroll down, all right? In the meantime, please do share, do follow us on Facebook and YouTube, give us a like, all right, so that we encourage and then we'll continue to do more of this, all right. For the full series of my accounting videos, you can go to our website, themathcenter.com. There I have the whole complete course of e-videos where and with exam questions that I have explained, where I talk about this course called IGCSE Accounting, and I prep students for it. All right, I'll see you. So never mind, let's start. Let's go ahead and get started now. This is question 28. Roshan's sales for his first year of trading was 55,000. His gross profit margin was 20,000. The closing inventory was 3,200. First of all, a little bit of definition. Gross profit margin is defined as sales minus cost of sales. It will give you your gross profit. Okay, that's the definition. So now this margin is 20%. That means if your sales is $100, right, your gross profit will be 20 and your cost of sales will be 80. If we choose to use percent, all right, sales will be 100%, cost of sales is 80%, gross profit is 20%. Or you can choose to use it as dollars. $100 on sales, cost of sales is 80, your gross profit is 20. Now the closing inventory for that year is 3,200. What were the purchases for that year? So you have to, let's calm down first. Let's arrange to sort out our cost of sales. Now you can do some simple calculation here because you know that your sales is already 100. 100 is equivalent to 55,000. Therefore, you can work out your cost of sales 80% of that and gross profit 20%. Or I like this. I know this is a bit old-fashioned, but this is really what I like. In a trading account, in the T form, the sales is, let me see. I like this part here. Okay. The sales is 55K. Is what I do. Okay. Still very simple T form. Here I will write cost of sales and therefore the gross profit. Also 55. Because this 55 is equivalent to 100%, the gross profit is equivalent to 20%. The cost of sales is equivalent to 80%. Okay, so 20 over 100, and this 55 is also 100%. Can you see it? So basically, the 55K, I think 80% here as cost of sales will give you 44,000. The K refers to 1,000. It's only because the short form and very expedient to use very little space and very quickly I can write it. All right. Okay, now let me see. 55,000 is actually equivalent to 100%. The cost of sales being 80% takes up 44,000. Therefore, 11,000 is the cost of sales. You can work the simple maths like this. 20% over 100% times 55,000 will give you 11,000. 80% over 100% times 55,000 will give you 44,000. Therefore, because I need to find purchases is stuck here inside your cost of sales. Cost of sales is defined as, in this case, opening stock is 0 plus purchases. Well, if you have purchases return, you have to net off your purchases return, which we don't have. It's very simple. So minus opening stock plus purchases, less closing stock. Okay. In this case, very simplistic. So the cost of sales is 44. Again, I remind you, I like to do it in simple equation form. So cost of sales is 44,000. The opening stock is 0, because first year of trading, you didn't buy anything, right? This is the year that you start to make purchases. Your purchases, I don't know, I call it P. Your closing stock is 3,200. Therefore, P by simple maths would be 44K plus 3,200. And so your answer must be D, 47,200. Okay, so there's a two-step way of thinking. if you are not firm upon about your concepts of what is sales, cost of sales, what's gross profit, you will fumble here. Okay, so don't sort it out first by identifying how much is the cost of sales, and that you can do by looking at this, by understanding that gross profit is sales minus cost of sales gives you gross profit. Or in this case, I like to use this trading account. A little bit old-fashioned, but it's very, very useful. Sales 55,000 on the right hand side, split it 80-20. Okay, 80% of that is the cost of sales, 20% of that is a gross profit. Cost of sales by definition is opening stock plus purchases, less closing stock. Okay, so fit in the figures and voila, you get your answer. Very simple, very quick. All right, you can play this video again if you need to listen to it again. All right. Meantime, work hard, study hard. I'll see you soon in the next video. All right, take care.